this video, we're going to be taking a look at the 2016 manufacturing final account, Ryan Limited. So it's 30% of the exam. You've got 54 minutes to do the final accounts question. So it's 120 out of your total 400 marks. Okay, so as always, we'll attack the question one in the following process. So step one, we lay out our accounts and that'll take us 5 or 6 minutes. Step two, we'll transfer the figures into the accounts from the trial balance and that'll take 6 or 7 minutes. Step three, we'll calculate the investment income and debenture interest for the year, and we'll do the amounts due as well, and that'll be 3 or 4 minutes. And then step four, we will complete the adjustments, where we have approximately 32 minutes to do that. And then step five, we will tot up the totals. Now, if you haven't looked at the step 1, 2 and 3 video recently, you should take a look at that, where we will look at the 2016 Ryan Limited manufacturing account in detail in steps 1, 2 and 3. But here in this video, I'm just going to kind of go through it without speaking. You can pause and stop the video as you please, but I won't be explaining it. So if you want to see why I'm doing what I'm doing, go to that video on steps 1, 2 and 3. Okay, so we'll get started now looking at steps 1, 2 and 3, and then we'll have a look at the adjustments then. So before we do that though, that's just an example of 2015 question completed, so it's not in any way neat or anything, but all the workings are kind of done on the face of the exam question. So okay, so we're going to get started into the adjustments now, and we've got 32 minutes in which to do this, but you'll find in manufacturing accounts you might actually get them done a bit quicker than you would in sole trader or company accounts, and that's because you've had to lay out a whole extra account. I think that's why they take it a bit easier on you in the adjustments. Okay, so there's the adjustments there. We have 9 adjustments, so let's get started. So adjustment number 1, stocks on hand at the 31st of the 12th 2015, you've got finished goods 77,600, you've got raw materials 36,100, you've got work in progress 34,200. So where do these go? So your raw materials and your work in progress are going to go into the manufacturing account, and your finished goods will go into the trade and profit and loss account, and all of them will go into the balance sheet. So the manufacturing account here, you've got your closing stock of raw materials 36,100 there, you've got your closing stock work in progress 34,200 there, and then you've got your closing stock finished goods 77,600. Now your closing stock will also go over in your current assets. And what you can do to save space if you want is you can just write raw materials and put the figure down beside it whenever you get the final figure when you're finished the question. and you'll do the same with work in progress and finished goods, and you'll see what I mean by that at the end when you see the last the question completed. Okay, adjustment number 2. Included in the figure for sale of scrap materials is €3,600 received from the sale of an old machine on the 30th of the 6th 2015. This machine had cost $18,000 on the 1st of the 4th 2010. Okay, so you need to look at adjustment number 3 as well in order to totally complete this question. So it says provide for depreciation on plant and machinery at the annual rate of 10% of cost from the date of purchase to the date of sale. So in some years, you know, that would just be one adjustment, but they've put it into 2 adjustments here. But it's the same amount of work that needs to be done. Okay, so first thing you need to know is that the sale of plant and machinery like this that you see in the picture here is not the exact same thing as the sale of scrap materials. So your business could sell, you know, they could make garden showers, or they could make garden sheds, or they could, you know, be a garden landscape and business or something like that, where they produce the goods, right? And they have scrap materials left over after they've finished making things. It is not the same thing as plant and machinery, okay? So it says here, included in the figure for sale of scrap materials is 3,600 received from the sale of an old machine, okay? So sale of scrap materials is not the same thing as sale of plant machinery. So we're going to minus that 3,600 out of there in order to fix the sale of scrap materials figure. Now what we'll do is we will fix the cost of the plant machinery. So from 320,000 there, we will minus 18,000. So our new cost at the end of the year is going to be 302,000. And that's after, you know, the 6th month. So in the 6th month, after the 6th month during the year, they sold that old one. So the new value, the new cost after the 6th month was 302,000 up here. Now, what we'll do is we'll look at the depreciation in plant machinery. So we got 31,100 there. So how do we do this? Well, it said provide for depreciation on plant machinery at the annual rate of 10% of cost from the date of purchase to the date of sale. So date of purchase to date of sale, you have to remember we had the 320,000 plant and machinery for 6 months, and then after the 6 months, when we had sold the other plant and machinery worth 18,000, we had 302,000 euro worth of plant and machinery. So 320 by 10% by 6 over 12 is 16,000, and then 302 by 10% by 6 over 12 is 15,100. So all together there we have 31,100 euro depreciation on plant and machinery. Okay, next then we'll work out, did we make a profit or did we make a loss on the sale of the plant and machinery? So the cost of the plant and machinery was 18,000, okay? Then we have to take away the accumulated depreciation. So what we need to do is we need to say, well, how long did we have that old machine for? So we got it on the 1st of the 4th, 2010. So how long do we have for 2010? We had it for 9 months. For 2011, we had it for 12 months. 2012, we had it for 12. 2013, we had it for 12. 2014, we had it for 12. And for 2015, we had it for 6. So altogether there, that is 63 months. So we had the old machine that cost, where the cost was 18,000, we had it for 63 months. So 18,000 by 10% depreciation rate by 63 over 12 is accumulated depreciation of 9,450 euro. That gives us a net book value of 8,550 euro. We'll compare that to the proceeds of 3,600, and therefore we will get a loss of 4,950 euro, which will go into factory overhead. So loss on sale of plant and machinery there, 4,950 euro. So that is that. Last thing that we'll do then is we will do the accumulated depreciation. So this 75,000 accumulated depreciation came from the trial balance. What we'll do to that figure then is we will minus the accumulated depreciation from the sold machine, which was 9,450. and we will add the depreciation charge for the year, which was 31,100. So altogether there, that is 96,650 euro, leaving us with a net book value of 205,350. So that is the plant and machinery adjustments done. So that is 2 adjustments done, number 2 and number 3. Number 4, it was discovered that finished goods had been sent to a customer on the 31st of the 12th, 2015 on a sale or return basis. These goods have been entered in the books as a credit sale of 15,000, which is a markup on cost of 20%. Okay, so again, this is an agreement between buyer and seller that states that if the buyer does not sell the goods, they do not have to pay for it. So the seller should not charge the buyer for these unless the buyer sells them. So what's happened here is the bookkeeper has entered the goods, the sale of the goods, as a credit sale of 15,000, and that's a markup of cost of 20%. So that was a complete and utter mistake. The bookkeeper should not have entered that as a credit sale until the buyer actually said, yeah, I sold them. So what we'll have to do is we will have to minus the selling price from sales, which is 15,000. We'll also have to minus it from the debtors figure, 15,000. And we will have to add the cost price of the goods back to the closing stock of finished goods. So the cost price is 15,000 divided by 120 multiplied by 100. So that is plus 12,500 there. And then obviously that closing stock will be affected down here as well. But down here, just put whatever your final figures whenever you're finished the question of all the 3 types of closing stock into here. Okay, that is adjustment number 4 done. Adjustment number 5. The suspense figure arises as a result of discount allowed 1,200 euro entered only in the debtor's account and credit purchases of raw materials 5,000 euro entered on the incorrect side of the creditor account. Okay, so here is the trial balance which we will use to help us complete the question. Alright, and it says, so the suspense figure arises as a result of discount allowed 1,200 entered only in the debtor's account. So what other account should discount allowed go into? It should also go into the discount account. And so you see here, this discount here is on the credit side, so that is a revenue, that is discount received. So discount received here, 6,000 euro. If we were allowed a discount, we allowed a discount to our debtor, we would debit it because that is an expense, discount allowed. So this discount received is going to reduce, okay, by, I don't know what happened there, by 1,200 euro. So 6,000 minus 1,200 euro. Now, my 2 sides will not equal now, okay? So what I have to do, I have to go to my item incorporating the suspense, and I have to minus 1,200 from that side as well. And now my 2 sides will equal. What I have to do then as well is I have to go credit purchases of raw materials 5,000 entered on the incorrect side of the creditor account. So if I purchased goods on credit from a creditor, I credit the creditor account. That's what I have to do. But that's not what happened. So what happened by mistake was that the creditor account was debited. So if we just imagine this, what should have happened, so green pen, we would credit the creditor account 5,000 euro. What happened by mistake is that we debit the creditor 5,000 euro. That's what the bookkeeper did by mistake. So how we will fix it is we will put 10,000 euro on the credit side of the creditor account. So creditor here, creditor account, we will, where's the creditor account here? We will add 10,000 euro there because 5,000 of that is correcting the mistake of it going on the opposite side, on the debit side, and 5,000 is actually recording it. So we add 10,000 there. So as you know then, your 2 sides will not equal if you add 10,000 to one side. So what you have to do is you have to add the 10,000 to the debit side as well, and then both sides will equal. So That is our suspense one. The working's done for it, so let's put them into the accounts. So in the manufacturing account, we're going to look at the general factory overheads, and we will minus the 1,200 and add the 10,000 here. In the TPL, we're going to minus 1,200 from the discount allowed, and then in the balance sheet, we're going to add 10,000 to the creditors. So 10,000 to the creditors here, and discount allowed, we minus 1,200 from it there. And that is the adjustment number 5 complete there, the suspense adjustment. Adjustment number 6 then is the bank adjustment. So the figure for bank in the trial balance has been taken from the firm's records. However, a bank statement dated the 31st of the 12th, 2015 had arrived showing an overdraft of €36,300. A comparison of the bank account and the bank statement revealed the following discrepancies. So number 1, a cheque for 800 received from a debtor has been dishonoured. This has not been entered in the books. Number 2, rent of €5,100 for 6 months ending 30th of the 4th, 2016 was paid directly into the firm's bank account. Number 3, a cheque of €2,000 issued to a supplier had not been presented for payment. Okay, so the bookkeeper knows about things that the bank, AIB Bank, doesn't know about, and AIB Bank knows about some things that the bookkeeper does not know about. When we're finished this transaction, we should have the same bank figure. Okay, so we're going to try and get the same bank figure both. If we don't get it, we're going wrong somewhere. So let's take a look at the trial balance. We saw earlier on when we were entering the figures into the accounts that we have a bank figure here, 42,600 on the credit side. That means that we have an overdraft of 42,600. The bank statement shows a overdraft of 36,300. So 36,300 here. Right, so now let's get started. So what we have to do is we have to think, which bank account figure needs to be adjusted? Is it the bookkeeper's bank figure or is it the AIB bank figure? Okay, so the first one says a cheque for €800 received from a debtor has been dishonoured. This has not been entered in the books. Okay, so a cheque for €800 received from a debtor has been dishonoured. This has not been entered in the books. Who knew about it? AIB Bank knew about it. It just wasn't entered into the bookkeeper's books. So AIB knows that the cheque has been dishonoured because they're the people that will be, dishonouring the cheque, or the other person's bank will tell AIB that it's been dishonoured, whatever. Okay, so a debtor had previously given us a cheque, so we said that that was money coming into the bank, so we would have debited the bank account. Now we have to show that it's money technically going out of the bank again. So it's not good news for our bank account. Our overdraft is going to increase by €800. So let's just think about that again. Previously, when we received the cheque from the debtor, we recorded the cheque coming into the bank account, that is debiting the bank account, but now we have to credit the bank account because the cheque was dishonoured. So if we credit the bank account, our overdraft will be increased. Now, what other accounts are affected? So it will be the debtor account. Now, this statement here, these two sentences, does not say anywhere that the debtor is going bankrupt or has gone bankrupt. Okay, it does not say that anywhere. All right, so we basically just need to add the 800 back to the debtor. What's going to happen is the bookkeeper here is just going to pick up the phone and ring the debtor and say, hello debtor, your cheque was dishonoured by the bank. Can you please forward me 800 cash or send me money some alternative way? Okay, so there's no word about, going bankrupt or anything like that. So no bad debts written off. A lot of people like to think bad debts written off, but there was no mention of it there. Okay, number 2, rent of 5,100 for 6 months ending 30th of the 4th, 2016 was paid directly into the firm's bank account. All right, so let's read that again. So rent of 5,100 for 6 months ending 30th of the 4th, 2016 was paid directly into the firm's bank account. Okay, who knew about that? AIB Bank knew about that, right? If 5,100 came into the firm's bank account, that is going to reduce the overdraft by 5,100. Then what other accounts are affected? Well, if we've received rent of 5,100, okay, for 6 months ending 30th of the 4th, 2016. Now remember, we're doing this for the end of 2015, and this is rent received. We're going to have rent receivable prepaid of 4 months. So 4 months for next year. Our tenants have prepaid us for 4 months of next year. And 2 months of this year. 2 months relate to this year. So we're going to have rent received 2 months out of the 6 months, which is €1,700, will go into add operating income. And then the 4 months prepaid for next year will be rent receivable from our tenants, prepaid, 3,400, will go into creditors minus 1 year. Because our creditors have prepaid us, we owe them that space in whatever building that it is. Adjustment number 3 then. A cheque of €2,000 issued to a supplier had not been presented for payment. So a cheque of €2,000 issued to a supplier had not been presented for payment. So when the supplier, goes into the bank and presents it for payment, that's what we need to record, right? Now, it does not say anywhere here that the bookkeeper did not record this anywhere in the books, okay? So we're going to put 2 big X's here because it doesn't say the bookkeeper hasn't recorded it, so we don't have to do anything, touch anything in the bookkeeper's books. But when this supplier walks on into the bank and lodges the cheque or gets the cheque cashed or whatever, what is going to happen to this overdraft figure of 36,300? Well, hopefully you will think that the overdraft will increase by €2,000 there. Now, at the end of these, you will get the exact same overdraft figure of €38,300. So hopefully you will know that those figures need to equal. If they don't, you've gone wrong somewhere. So you might have put minus instead of plus, or plus instead of minus, or maybe you put something into the wrong column. Either way, you've gone wrong. You need to figure it out there. Okay, so that is the bank adjustment workings done there. So it should only take about 6 lines of your workings. Okay, so there's no impact on the manufacturing account there, but what's it going to look like in the TPL and the balance sheet? Well, the bank figure there, we will plus 800 minus 5,100. In the debtors, you will add 800, and then you will have rent received, add 1,700, that is 2 months rent received. And then you will have rent receivable prepaid for 4 months, €3,400 in creditors amounts falling due within 1 year, because you owe your tenants the space that they have paid you for. So that is why it is a liability. Okay, note 7. So during 2015, Ryan Limited built an extension to the warehouse. The work was carried out by the company's own employees. The cost of their labour, €12,000, is included in factory wages. The materials, costing €28,000, were taken from stocks. No entry had been made in the books in respect of this extension. Okay, so let's have a think about that. Right, now, the workers paid, or sorry, not the workers paid, the business paid the employees' wages, the employees built the extension, right? The stock was used to rebuild the extension, or to build the extension, okay? What this manufacturing account is doing is it's calculating how much it cost to make the goods that the business sells. That's what the cost of manufacture is. Say they were manufacturing 100,000 units of something. The cost of manufacture is going to tell us how much it costs to make 100,000 units of something, okay? But included in these figures here, these costs, is actually the cost to make the extension. So we need to take the cost of the extension out of the manufacturing account, because the manufacturing account should only be telling us how much does it cost for us to make the 100,000 units that we are selling. So what we need to do is we need to take 12,000 from the direct factory wages, because if we left the 12,000 in there, the cost of manufacture would be inflated. Okay, so we need to take it out of there. We also need to take away the 28,000 purchase of raw materials out of there, because it didn't cost us 28,000 to make the 100,000 units. You know, we need to take that out of there. And what we need to do, we need to put that, both those figures, into the buildings, because that 40,000, the 12 and the 28 combined there, that is the cost of making that extension. It is not a cost of manufacturing some of the 100,000 units that we have in the manufacturing account. So that's really important to know that. Okay, note 8. Provide for a recent wage increase of 5%, which has been backdated to cover the 6 months from the 1st of the 7th, 2015. Okay, provide for a recent wage increase of 5%, which has been backdated to cover the 6 months from the 1st of the 7th, 2015. Okay, so the employees are to get a 5% wage increase, and they're telling us it's for the last 6 months. So from the 1st to the 7th. So they might just say sometime that without saying to cover the 6 months. So you're quite lucky that they're telling you the 6 months. Some people would have got that wrong, okay? So some people would have probably said it was 5 months because they see the 7th month there. So you have to know that includes the 7th, 8th, 9th, 10th, 11th and 12th month. Okay, so how will we do that? So we're going to have to add the wage increase to factory wages. And we work out here that is €5,500 wage increase. Now, how did I get that? It is 220,000, okay, multiplied by 5%, multiplied by 6 over 12 months, and that is 5,500 there. Sorry, that should say 5,500. Okay, and so let's think. We owe that, but we haven't paid the employees that yet. So we need to do wage increase due, €5,500 there. So that's important. All right. Now, going back to this is, we need to think about the buildings, right? So some of these employees helped make the extension. So some of this €5,500 here actually relates to the extension, right? So what we need to do is we need to, just like the 12,000, we need to figure out how much is the wage increase for those €12,000 that it costs to make the extension. So the people that made the extension, they got paid 12,000, but of that 12,000, you know, they're due a wage increase on that 12,000. So that is €300. So we're going to minus the €300 here, right? Because that €300 relates to the people who built the extension. So that is 12,000 by 5% by 6 over 12, which is €300. So minus €300 there. And with that, we're going to add that to the cost of the buildings. So buildings plus €300. Right, last adjustment there, adjustment number 9. So provision should be made for the following: investment income due and debenture interest due. So what we need to do is we just need to go to the balance sheet and we need to say, right, okay, investment income due. I didn't receive any investment income in this question at all, but in my step 3, I worked out the investment income for the current year was 8,400. So I'm going to have investment income due, €8,400. Then in my debenture interest due, my debenture interest for the year was 28,400. I didn't pay any of it, so at the end of the year I owe €28,400. Then note 2, the creation of a provision for bad debts equal to 4% of debtors. Okay, so the creation of a provision for bad debts. So provision for bad debts did not exist before now. Okay, so didn't exist before now, we have to set one up. and it's going to be 4% of debtors. So it's basically the business just saying, okay, I'm going to anticipate that 4% of my debtors are not going to pay me. There might be some situation with someone going bankrupt or something like that. So look, let's look at the new debtors figure. The new debtors figure in the balance sheet is 37,800. Multiply that by 4%, we will get €1,512. And then you just see, I haven't got that directly underneath the debtors, but there's no problem. You can just draw an arrow up, as you can see that I've done there, from bad debts provision up to debtors. And then the examiner will know you're taking it away from the debtors figure. You have to then put the whole 1,512 into the selling and distribution expenses in the trading profit and loss. And that is your adjustment done there. So that's all your steps 1 to 4 complete. Step 5 is the next thing you have to do, which is just tot up your totals. So that should take you 5 minutes. So this is how it looks now, okay? So all you have to do is kind of add things up, bring them out. If nothing has happened, the figures, just bring them out, okay? So just tot them all up. And then it should look like so. So your cost of manufacture here, 913,750. You might get your own marks for this figure if you didn't get that, 913,750. Okay, the trading profit and loss in the balance sheet then, this is how this looks. You must total these, okay? So the cost and the accumulated depreciation, you must total authorised and issued here, okay? And your total net assets and your capital employed should be the same there at 1494638. So that's the 2016 Ryan Limited Manufacturing Account question done there.